Many people are keen to reduce their estate's future liability to inheritance tax by planning to mitigate the tax bill. That tax planning is very important, but it is just that, an aspect. In reality, there is much to be said for looking at this differently. Think about estate planning first, with tax planning second. The two are symbiotic but should be led by estate planning. How does estate planning differ from inheritance tax planning? And how can you make sure you find the best solution for your situation? Estate planning is about taking steps to protect your estate for future generations, not especially about reducing tax. For example, many people want their wealth and assets protected for their bloodline. They want to protect against children inheriting part of their wealth, then later being subjected to a divorce or bankruptcy, and part of that wealth disappearing to an ex-spouse or to creditors. Making plans today to keep wealth and assets in the bloodline and to protect future inheritors is an example of estate planning. Any inheritance tax planning becomes part of that wider exercise. For many, this is a delicate balance between their needs today and the future well-being of their beneficiaries. Leaving a legacy that is not unnecessarily reduced by future taxation is a common desire, but they don't want to leave themselves short in their own lifetime. Outright, large gifts can be complicated by this, and major gifts usually require the donor to live 7 years. There may also be reservations about when beneficiaries should receive the gift. We must also factor in that future governments might introduce more stringent rules and tax rates. It is a complex position, but there are ways to plan for inheritance tax that deal with most, possibly all, of these factors. You just need the right solution and suitable advice. There are inheritance tax exemptions and allowances, and using them properly is a simple but highly effective step. Gifts can be made regularly in a drip-feed fashion. For example, every individual can give £3,000 per year immediately outside of the tax loop. There are also schemes such as the Enterprise Investment Scheme. From April 2026, full relief from inheritance tax applies only to the first £2.5 million of business assets, with 50% relief on anything above that. Which of these or other tax-saving options work best for you will depend on your circumstances and wider estate planning, and a skilled appraisal of your situation and wishes. The key is to coordinate estate planning and inheritance tax planning into one plan that meets all your requirements, both short and long-term.